Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on today? It's Fed Day. Very exciting. Actually, I'm recording this right before the Fed announcement. Okay, so what are we doing so far today? Dow's up about 200. NASDAQ's up about 50. I want to talk a little bit about yesterday. Yesterday, we had that CPI number come out. It came out at 7.1%, meaning prices are going up 7% a year. And this was celebrated as good. Stock market took off. Dow went up about 700 points, but it gave it all back. Only closed up about 100. Now, not everything in the CPI was good. If you look at food's going up about 12% a year. And I don't think that's good. I don't think that should be celebrated, but we'll see what happens today. Today, we got the Fed announcement coming out. Fed's going to raise 50 basis points. Now, will that be taken as a good sign? Is that a good thing the Fed's raising? Maybe the stock market will have another run up again. A lot of people betting on the big Santa Claus rally. Now, I'm not betting on that Santa Claus rally. I actually think the market's going to pull back down. Now, don't get me wrong. Today, we could bounce up just like we did yesterday, but I think the short sellers are going to pile back on that. I think they're going to take it as a gift and say thank you, and they're going to pile back on and bring the market down. Now, yesterday, I traded the SPY. SPY jumped right up to 410 right out of the gate. So it was at 410. All the short sellers came on, and it went down below 400 before it closed like at 401 or so. We're trading at 405, so I do expect that maybe we get that bounce to 410 again, but there's a lot of resistance right there, and I think the short sellers are going to come in. I think they're going to bring the market back down. We'll see how that all plays out. Let's jump over to the real estate market. Now, real estate market always fascinates me. A lot of people say we can't go down because nobody can sell. People are locked in at a 3% rate when the new rate's going to be 7%. So no one wants to sell their home because they'd have to go get another one at 7%. So what it's kind of done is locked up the mobility of our country. Our country's no longer mobile. Look, if you get a job transfer, you're not going to be able to go because you're locked in at a 3% rate here, and there's a 7% rate to buy a house within a new place. So the market has really come to a standstill, come to a freeze. Okay, that's normal this time of year. I get that, but maybe they'll try to thaw this out. Now, back in the 1980s, we had a little bit of a problem in the 80s getting houses sold. So what we allowed, though, in the 80s, you could go and assume that 3% mortgage, right? You could go and assume the 3% mortgage, and that way you didn't have to get the new mortgage at the higher 7% rate. Maybe we'll go back to those days. I don't think so, though, because the bank wants you to refinance at the higher rate. Banks are losing a lot of money on those old loans. They want you to sell your house and get the new loans. But the mobility is really locked up. But here's the thing. A lot of people that have bought their house, they can't really afford it. A lot of people in the last year or two, they jumped in. They made the stretch to get into a very overinflated bubble. Now, this bubble is about twice as high as it should be. That's why I'm calling houses to go down by about 50%. But they made the stretch to get in. They bought the house at the high rate, and now they can't afford the house. Well, they got a little bit of a problem. Now, in the old days, what they do is they just refinance, take money out of the house, and then they have the money to live. But today, you can't refinance because of the 3% rate, and you refinance, it's at a 7% rate. So what do? Well, you get these things called a HELOC loan, a home equity line of credit. Now, these are interesting because they're really like the new credit card. Now, let's talk about credit cards first. I mean, people have maxed out their credit cards. Credit card debt is at a record high. All debt's at a record high. Government debt, corporation debt, personal debt. But credit card debt is at a record high. Average credit card payment is 20% interest rate, right? So they, instead of getting those are maxed out. So they go get the home equity line of credit, right? So the home equity line of credit, it starts at 9%. Now, when I say starts at 9%, that's the starting rate. Now, it goes up and goes down. It's an adjustable rate. Today, when the Fed comes out and raises 50 basis points, your HELOC loan's going to go from 9% to 10%. It's going to go higher. So people are piling on this debt on top of their regular mortgage, right? So they got the regular mortgage, and now they're piling on the HELOC loans. Okay. Now, you see these companies also. I want to talk about stuff. These buy now, pay later companies, these are just like credit card loans, but they're not counted in that credit card debt, right? So the credit card debt is not only at a record high, it's at a record high plus all the buy now, pay later programs that are started by these companies. These companies are flourishing right now, but I don't think anyone's going to make the payments back to them, so they'll probably all go out of business eventually, but we'll see how that works. Okay, so you got these HELOC loans. They're attached on top of the regular loan. So people have too much debt on their house. Now, I have a client. We'll just use rough numbers. All right. So he bought his house at $1 million, right? But the house needed a lot of work. Okay. So the seller's real happy that they came in and bought it at $1 million. And so, but the property, it needs a new kitchen, needs new bathrooms redone. So he's got $30,000 for the kitchen, $10,000 for each bathroom, but he doesn't have the money because he put 20% down. So he bought this house at $1 million, put $200,000 down. Now he's out of money for the fix-up, for all the repairs that's needed. And this is kind of a fixer-upper. A house needs about $100,000 in repairs. That's just repairs, right? So what did he do? Went out and got a HELOC loan. So he had an $8,000 mortgage, got a HELOC loan for $100,000. So he's up at $900,000. Well, the house has already come down 10%. So $900,000 and the house is worth $900,000. So it's exactly what he owes. Now, if he had to sell now, well, he'd have to pay closing costs and he'd lose a lot of money. He'd be underwater. But he says, Mike, I'm not going to sell now. I just put $100,000 into the property. I fixed up the kitchen. I redid the kitchen. I remodeled the bathrooms. And this means that he's going to stay there forever, right? He's got 3% mortgage and he put $100,000 more into the house. So he's not going anywhere. But okay, so he's at 900. But the houses, they're still coming down. So it's going to go 800, 700, maybe even 600. Now, how much pain can he handle? It's going to be 5 or 10 years before it gets up there again. Now, the HELOC loan, he's got to make his payment there. He's got to make his payment on the mortgage. And he's doing this on a house that's going to be extremely underwater. Now, people in the last year that bought, just this year, there's 250,000 of them already underwater. When you're underwater, this is not a good thing. This is a bad thing. They have what's called the negative equity. And a lot of people, they can't afford to make their mortgage payment right now. This is without the HELOC loan attached on. Do you realize right now 1.5 million people are not making their mortgage payment? Okay, well, maybe they don't want to make their mortgage payment. Maybe they're hoping for a government bailout. I don't know. But 1.5 million people are in jeopardy of being foreclosed on. Now, foreclosed is when forced selling comes into the market. Now, as the market continues to go down, there's going to be more sellers forced into selling. It's called forced selling. That's just the way it works. Debt's exploding. The market's coming down. They got negative equity. They're going to be forced to sell their house. The bank's either going to come and take it back or they're going to give it back to the bank. It's just that simple. That's actually how it works. And that's what's going to send the market spiraling downward. Now, you'll see a lot of real estate agents, when you go to list a house, they'll tell you, well, look at your house is great, but you got to remodel the kitchen, you got to redo the bathrooms before we put it onto the marketplace. Well, you tell that real estate agent they're crazy. Now, when the market's going up, that all makes sense, right? Because it takes you 3 to 6 months to get the remodel done. So it's all right because the market's going up and you're going to get your money back that you're putting into the remodel. But if you remodel when the market's going down, you're not going to get your money back out. Look at the house. Let's take $1 million house, right? Let's say you're going to put $50,000 into the house to get it ready to sell. All right, you put that $50,000 into the house, the market comes down by $100,000. I mean, you're out $150,000. You're not going to get that money back. It's not going to sell at the higher rate. So some of these real estate agents out there are not necessarily giving you good advice. Now, I know some agents would argue with me, oh, Mike, they always recover the costs. The things you recover the costs on are like painting, maybe putting in new carpet, just cosmetic. But you can do that in a week or two. I'm telling you, don't do major remodels right now in a downward market. It just wasn't going to pay off. But all these people that are now taking the HELOC loan to remodel their house because they think they're going to stay there, but their house is now underwater. It's negative equity. It's dropping like a rock. And the banks, well, they're happy you remodeled your kitchen. They're happy you remodeled your bathroom because when they take it back, they'll be easier for them to sell it on the marketplace. But look at a lot of these people that are putting the money into their house, they're going to become part of the forced selling because they took out the loan. They took out the debt, right? They got a mortgage. They got the HELOC. That's a lot of debt, especially with the recession coming. Look at right now, I mean, there's going to be, Bank of America says 200,000 people a month are going to lose their job. It's going to be a lot worse than this. I'm telling you, it could be double that. It could be up around 4 or 5 million people lose their job within the next year. These are people that are not going to be able to make the payments on their mortgage, on their HELOCs. These are people that are going to be called forced sellers. They're going to be entering the marketplace as the equity continues to go down. Now, the real estate agents, they won't tell you. This will tell you it's always a great time to buy. I'm telling you, have some patience, sit back, and it will all work itself out. The opportunities will be there. We're 50% above the mean right now. We got to come back 50% just to get back to normal. And it's going to happen. Look, we went up 20%. And now mortgage rates, they doubled. They went from 3% to 7%, over doubled, right? Well, look at the real estate agents will always tell you, look at buy the house now. You can refinance later. And maybe you can. Look, let's say you go out and buy that $1 million house and you put 10% down. So you got a $900,000 loan at 7%. And they say, go ahead and do that because you can refinance when the rates come down. Well, okay, look at what if the rates don't come down? What if they keep going up 7, 8, 9, 10%? You can't refinance. Well, maybe you consider yourself lucky. No, you won't consider yourself lucky because your house is going down. Now, let's say you do get lucky and rates go down from 7% down to 5% and you want to refinance. Well, the reason they went to 5% is Jerome pivoted, right? And he pivoted. That means something's broken. Well, what's broken is the housing market. So your houses went down. Now you can't refinance because you have negative equity and no bank will make the loan. As a matter of fact, they're thinking about calling the loan due that you have on your HELOC. That's what they're thinking about doing. They're not going to give you another loan. They're not going to let you refinance. It doesn't work that way. Anyways, I got a little carried away. I hope you enjoyed this. If you did, give me the thumbs up. I'm Tall Mike. It's Fed Day. By the time you listen to it, the Fed will already have made the announcement of 50 basis points. I say we get another, maybe a little push up, then Jerome Powell starts talking, and then we might get that pull back down. That's just the way I see it. That's my take on the market. We'll see how that all plays out. Get out there, everybody. Have a great Wednesday. Bye-bye now.